Hello everyone and welcome back to our channel. Today we're diving into a major shift in global trade. With President Trump's recent tariffs on China now in effect, companies are rethinking their production strategies and moving operations into Southeast Asia. In this video, we're going to explore what this means for the global market, the beneficiaries in the region, and some of the challenges along the way. Stay tuned for an in-depth look at this evolving landscape. In today's video, we'll cover four main topics. First, tariffs and trade tensions. A quick recap of Trump's tariff measures and the resulting trade war with China. Second, shifting production. How companies are relocating from China to countries like Vietnam, Thailand, Malaysia, Indonesia, and Cambodia. Third, benefits and challenges, what this means for Southeast Asia, from economic opportunities to issues like rising labor costs and supply chain complexities. And finally, future outlook. How these changes might shape global trade and the possibility of a new order in production and supply chains. By the end of this video, you'll have a clear picture of how these policies are reshaping production and what that could mean for the future. If you find this analysis interesting, be sure to hit that like button and subscribe for more deep dives on global trade. Before we get too deep, let me know in the comments. Have you noticed any changes in where your favorite brands manufacture their products? And if you're new here, don't forget to subscribe and hit the notification bell to stay updated on all things global trade. Let's start with some background. Recently, President Trump imposed a 10% tariff on Chinese imports, significantly lower than the 60% initially threatened, but enough to stir the pot. This move is part of a larger strategy that has already seen many companies relocate their production lines away from China. The trade tensions have been escalating for years, and the situation only got more complicated with reciprocal tariffs from China on U.S. goods. Over the past several years, and especially during the COVID-19 pandemic, companies have been diversifying their production. We've seen a steady exodus of international firms from China into Southeast Asia. Countries like Vietnam, Thailand, Malaysia, Indonesia, and even Cambodia have opened their doors to manufacturing giants. This trend isn't solely about avoiding tariffs, it's also a reaction to rising labor costs, supply chain disruptions, and geopolitical uncertainties. Today, we'll examine how these tariff measures have accelerated this shift, what benefits Southeast Asia might enjoy, and the potential risks involved as companies try to reconfigure their supply chains for a new era of global trade. First, let's talk about the trade war itself. Trump's tariffs on China, while lower than initially threatened, have set off a chain reaction in global trade. China, in response, has slapped its own tariffs on U.S. goods, intensifying the conflict. This tit-for-tat has forced many companies to think strategically about their supply chains. Tariffs disrupt established supply chains and increase costs. The U.S. and China are now locked in a trade war that affects more than just two nations. Many companies are now looking at alternative regions, particularly Southeast Asia, to mitigate these challenges. Now let's zoom in on Southeast Asia. Countries like Vietnam are already experiencing a surge in production as major brands like Nike, Adidas, and Puma have set up shop there. Vietnam isn't just attracting fashion, its electronics manufacturing is also booming. Thailand has seen an influx of Chinese electric vehicle factories, and Malaysia is becoming a strategic hub due to its competitive labor costs and logistics. Even Cambodia, with its established garment and footwear sectors, stands to benefit. Experts note that while these moves could bolster local economies, they also come with challenges like reliance on Chinese raw materials and increased compliance costs when products still contain Chinese components. But it isn't all smooth sailing. While Southeast Asia might benefit from the influx of new factories and investment, there are significant challenges too. One major issue is compliance. If a product made in Vietnam contains any Chinese components, it might still be subjected to tariffs. This creates a complex web of regulations that companies must navigate. Additionally, increased labor costs and the need for upgraded infrastructure may slow down some of these shifts. So, what does the future hold? If these trends continue, we could see a reconfiguration of global production networks. Southeast Asia might emerge as a major production hub, but this shift also brings new challenges, like ensuring fair labor practices and managing the increased complexity in supply chains. Additionally, ongoing trade policies under different administrations, both in the United States and abroad, will continue to influence these decisions. Companies will need to weigh the benefits of lower tariffs against the costs of new production setups and potential regulatory hurdles. What do you think? Could Southeast Asia become the new epicenter of global manufacturing? Share your thoughts in the comments below. To wrap up, Trump's tariffs on China are not just a policy issue, they're reshaping the global trade landscape. With production shifting to Southeast Asia, we're witnessing a major realignment that could redefine supply chains for years to come. If you enjoyed this deep dive and want to learn more about global trade trends, please hit that like button, subscribe, and share your thoughts in the comments. And don't forget to click the notification bell so you never miss an update on the ever-changing world of international business. Thanks for watching and see you in the next video.